that is how Friday ended up playing out. Now, as we head into the upcoming overnight session and the upcoming week, the existing zones are still technically valid and in play. And on the downside, the 49.93.5 to 5,003.5 is still a bias confirming zone, and the 5,009 to 17 is still technically a zone that is still intact, right? We haven't actually broken it yet. Now, if we do break below 5,009, that would certainly be a bearish indication because it would be essentially a pattern of follow through following the selling that we saw on Friday and in the shortened holiday session. So if we are going to stabilize, then ideally we want to see ES holding above 5,009. But even if we can hold above 49.93.5 to 5,003.5, there would still at least be the potential for some stability. If we look at the hourly chart over here, you can see that the market has built up a relatively defined balance area that looks like this, right? So we had some structure built here, then we broke out above this swing high at 5,009, and now we're holding above that swing high. So if the market is going to stabilize and head higher, the ideal situation for buyers would be that ES holds above 5,009 and this balance area or range structure remains intact and it doesn't break. Because if we break down below 5,009 to roughly 5,014 or so, then this area, the 09 to 14 area, will then become resistance, right? Broken support will then become resistance. And even though we can get buyers active at 49.93.5 to 5,003.5, at that point we would need to see a break back above the broken 09 to 14 area and ideally above today's overnight high in order for control to shift back to the buy side. So you can think of 09 to 14 as a short-term or smaller time frame bull-bear zone. Holding below it, the sellers have potential to gain control, and holding above it, the market has potential to stabilize and continue trading within the range. So if we break below here, and let's say we do attract buyers at 49.93.5 to 5,003.5, the real thing to watch out for is going to be whether buyers can then reclaim the 09 to 14 area and start trading back above it. If they can, then it would tell us that, okay, perhaps it's a false or failed breakdown pattern. If they can't, then it would be a proper breakdown pattern below essentially this range, something like this. And in that scenario, if we do get a proper breakdown below this whole range, then you can see the 50% extension is down at 87.25 and the 100% extension is down at 49.63.25, which is a bias confirming area, right? We have a support zone down there at 49.55 to 62. So if we do break down below 09 and it's a proper breakdown where there's not really any response at the next zone, or even if there is, we then hold below 09, well then we can get buyers stepping in at 49.55 to 62 and at 49.34 to 43. So then these two lower zones could come into play. So that's going to be our view as we head into the upcoming week. We're going to see how the market behaves at these two zones to help us establish our intraday bias. The short-term bias will continue to be neutral, and I think that we are at a important inflection point over here. So how the market behaves here is going to be very telling as to the state or the level of strength or weakness that we're dealing with. If we hold, then perhaps we can continue trading within the range and maybe even eventually try to go higher. But if we break down, then I think that will be problematic. Looking at the other markets, looking at NASDAQ, we have a high volume node at 17,710. So I would keep an eye on that. 17,710 is going to be an important level to keep an eye on. And, we can see that there's also kind of a defined balance built in NQ as well. So if NASDAQ starts to break down below 17,710 and, below kind of the lows over here, then it can bring the range low into play. And if we take this area out, which is 17, let's say 460 to 540 or so, then of course things would start to get more bearish in NQ, and that can lead to more selling in the S&P. So if the markets are going to stabilize, then ideally you want to see NASDAQ holding above the 17,710 high volume node. And a proper break or slice below that area would be like the S&P breaking 5,009, and that can then kick off a bearish move into perhaps this swing low, this pocket of support around 17,540 to 582, and eventually possibly even lower. So I think we are at a important inflection point where if buyers are going to maintain control, then they need to step up. And if they fail to step up, then we could see a shift in short-term control, and the sell side could get much more aggressive. The first time the market pulled back recently, the idea was that the intermediate term bias is still bullish, the bigger picture is still bullish, and this is the first retracement following a new high, so it's likely that buyers will step in. Now, if the market starts breaking again, it's not going to be the first retracement anymore. Now it's going to be second time down, and that is a riskier proposition for buyers. So if we start breaking down now, I think it's going to be much more risky for new buyers to step in. Based on my experience with the S&P, this market is relatively forgiving on the larger time frame. What I mean by that is that when the markets pulled back as much as they did last week, when I say it's forgiving, what I mean is that usually the market won't just fall apart on first attempt. Usually the first crack or the first pullback usually gets bought. And this bounce is essentially a way for, or could be a way for, larger time frame participants to then manage their positions and get out. And when the market comes down second time into those same areas, usually it doesn't attract as much demand. It doesn't attract as much buying. So the second time down is usually much more risky for buyers. First time down, usually not as much, because again, like based on seeing these markets behave over the last 15, 20 years, they tend to be quite forgiving on the larger time frame, as in they will let you out pretty close to or at a good enough price. Even if you've been caught on the wrong side on the larger time frame, quite often these markets will give you an opportunity to get out and kind of correct your position or rectify that. But the second time down is usually not as forgiving. So I think that if the markets are going to maintain the recent bullishness and head back up, then buyers need to step in now to maintain and hold on to that structure. And if they fail to do so, then there could be a more violent or a real downside directional move that can play out. So I think that if we start breaking down in a sustainable way, right, sustained momentum on the breakdown, if that starts happening this week, then I think we will have to be much more cautious on the long side now as opposed to last week. Last week was a different situation. first pullback, expecting that forgiving move to come in. That's happened now. We have gone back up towards the all-time high. Anyone who was caught on the wrong side had ample opportunity to get out. So now we either go back up and this ends up being a proper bullish environment, but if we start breaking down, then we may need to go much lower to attract responsive buyers. So I think this particular week, we're going to have to be much more careful on the long side if ES starts breaking, and we can't just assume that, oh, we're in a bullish environment, so buyers are going to step in at every zone. I don't think that's going to be the case anymore if Nasdaq starts breaking down below, 17,700 and 710, and the S&P starts breaking down below 5,009 and 49.93 half to 5,003 half. I think that could be the beginning of a more bearish phase in the market then. Now, as day traders, we don't need to look out too far into the future, but doesn't hurt to be prepared, because all of these things that I'm talking about, they are part of the market context. They're part of the market environment. They directly impact the tactics and the setups that we should be executing on the day time frame. So this isn't just like some exercise in analysis. This is very relevant to how we plan on trading this week. So those are thoughts as we head into overnight.